weekend all. Ira Epstein, and here we are with your financial market wrap-up, your weekend edition. And this is for Friday, the 6th of September, 2024. And what a week. They beat the heck out of the stock market. I think it's in the S&P, the worst week of the year so far. So these markets have just come tumbling down. No surprise. Do you remember as the market was going up, I kept saying first, the objective was 5,200, then 54. Then when it got to 56, they started saying it's going to go to 6,000. And my comment to you was nothing grows to the sky. They'll just keep going until they can't reach it. Well, now that you're getting the break, does it make sense? What month are we in? September. What's the weakest traditional month of the year for stock indices? September. Are we breaking? Yes. Why is anybody confused? I don't get it. Let's talk about that and a little bit more. First, I want to remind you that our sale is going on right now. It ends this coming Sunday. 3 months of the complete futures, the written, the videos, all the special intraday updates, $99 for 3 months. Heck of a deal, I'm telling you. You won't get this. We haven't ever done this sale like this before. If you want just the combo package of Spider ETF videos and the futures videos, not the written updates, $49 for 3 months, or you can choose from either of these packages. And we do have a link on the website for you. If you go to iraepstein.com on the top left, you'll see the sale. That will come off on Sunday. If you move your cursor up here, there'll be something for you to work with there. You'll see an icon. So let's talk about today. The market got what it wanted. How long have you and I heard the Fed's going to cut, it's got to cut, it's going to cut, and it's going to cut aggressively? So when it starts ready to happen, why does the market go down? And the reason is what I've done my best to explain. The only reason that the Fed will cut, it'll cut when it thinks the economy is tipped. And when it tips, the market, the Fed's job is to try to cushion it and as best as it can, get ahead of it. Got it? So we had 142,000 jobs. That's not the 114. It does not guarantee that the Fed's going for a 50 basis point cut. They could go 25. That battle's going to go on from now until the 18th. You will get everybody saying something. I admit, so far I'm in the 25 basis point camp. Had it been 114, I'd have been in the other camp. The unemployment rate came in as expected. We saw stronger payrolls in private and government. Okay, where's the big rush? It isn't there. That's what I'm saying to you. And the employment numbers were okay. What they did do bad is they revised downward a bad 114,000 jobs number to 89. And remember, in July, you were dealing with Hurricane Beryl, and in the United States, we retool the auto factories in the summer. And when they do that, production lines get shut down, people get let off, the unions work with that, then the tooling people come in, everything gets redone, and that can last a while. Well, now, people are going back. We don't have the Hurricane Beryl. And 142,000 by any stretch is not a bad number. So that is the battle that you have going on between 50 and 25 points. But why the big break in the market? Because the market has come down and said, you know something? We were pie to the sky. And valuations, the heck with them. They didn't matter. We're going to do rotation because this is such a strong market. We'll buy the Russell, we'll buy a lot of the Dow components, and away you go. That's going to change. Now people that are in it have to decide, are they investors or traders? That's the key thing. You will hear people, rightly, saying, get your shopping list out, buy a little bit of this, a little bit of that as an investor. As a trader, this is not a buying moment. This is a moment where you're looking to sell rallies, not buy the breaks. And somewhere between the end of September into October is where I'm going to pinpoint the market typically bottoms out. But right now, it is doing what it has done since World War II. It is breaking in the month of September. You can argue with me all you want. The statistics are there. In the bonds and the notes, people are buying them. You're trying to get the disinversion. The Feds come to the rescue. What market does the Fed affect? Well, they don't go in and do things to the 30-year. The marketplace does that. Their impact is the shorter, the 6-month, the 2-year. That's where their pressure will be felt. In the grain markets, well, traders are going to fight this week about corn. But on the 12th, we're going to get the first real bushels per acre, BPA, that comes out. It's typically weighted to the southern states, which have done a lot of their harvesting. They're just getting the harvest going up here, but you're not going to shift corn dramatically in a lot of bushels per acre one way or the other on the whole part. The market that's super vulnerable is soybeans because you're still susceptible to dry weather, frost, things of that nature. The problem with any rallies that develop, the farmers waiting to sell into them hard. That's what you got to keep in the back of your mind. Still coughing. I think it's allergies more than it is now anything else because my eyes burn like mad. On the S&P on a monthly chart, we're finally getting a correction. So if you and I come back and we go back a little bit here, here is August, the end of August, the high. We're at 56.61 on a closing basis. And here we are coming into, we're only September 6th, and we're down to 54.19. So we've had a pretty good break so far during the month. When we go to the weekly chart, and you see me cover this all week long, I said I thought we would challenge the 18-week moving average of closes, and we're there. We've done just what I said. And I've said this for a few weeks now, that that is likely, especially if you get the September break. The big question is, do you take out this low? So I'll be looking to see if that happens over the next few days. When you take a look at the chart, you know that that's going to be in the neighborhood here of the 5,100 level. The pattern in the chart right now, well, you can see you came up, and when you go to the swing line, you have a higher high and a lower low. There's nothing you can do with that. It's just how the market is going to be as you get it. As we come in, this is the first move under the 18-week average. So you've stepped out of the bull trend, except that. You haven't entered a bear trend, but the bias is turned down. The resistance are these highs and the Bollinger Band all together. And you've opened the door for a possible challenge of the lower Bollinger Band, which is going to jump. Now, let me go back a week here. Last week you were 51.50. The week before, 51.07. So let's assume it jumps 45 points or so. It's going to be around 52.5 probably when we open up Sunday night. That, to me, looks like the logical support. And that was the first objective that the market had for the year. If you go back to the beginning of the year when analysts were saying, where do they think the year will end up? So strange how those things work out. In terms of momentum, down. So the momentum's down, the bias is down, but you're not trending down, and September's often a weak month. The Dow is acting stronger because it's staying over the 18-week average. On breaks, look for that to be a potential support zone. And if you want to argue with me about the resistance points of the Bollinger Bands, don't bother writing. It's done its job. It's not an exact number, I get it, but it's pretty darn close. And that's where I think on this chart, traders were coming out of the market and buying pullbacks and figuring out if they want to stay long. This was the easiest spot to buy back because you had already the higher highs, higher lows. You don't have that in place now. In the NASDAQ, you have a downtrend. So I know you're all going to say, AI, this is the whole thing. They can go lower. The pros are probably going to sell this at 19,302, but it's a 700-point risk all the way up to 20,025 to break this bearish pattern. The objective, if it keeps falling, 17,797. And just like in the other markets, if you go back a week or so, you can see the market is jumping almost 100 points at a time. So support's probably going to be very close on Sunday night when you reopen to where prices are. Wouldn't surprise me. The Russell's also entered a downtrend phase. Lower highs, lower lows, under the 18-day average, momentum down. Could it go back for these lows? Well, it won't be easy, but yes, it could. Is it likely to fight a battle at the 18-day average? Absolutely. If you just put a name on the chart, throw it away, take off the name, and you wanted to be short, 21.13, and you'd put a stop over the recent high, and you're looking for those lows. That's one way to consider the market. 5-year notes, bullish. Overbought. But probably going to the upper Bollinger Band. Same thing in the 10-year notes. If any of you have hay fever, you know what I'm going through. And I'm on all this stuff. I've had it all my life. It doesn't go away at this time of the year. In the dollar index, you can see how you're working yourself down. Well, on a weekly chart, you've just had a bearish inversion. Yeah, take a look. The 18-week average just got under the 100. A good hard rally into that is where the pros will sell, but you have an embedded reading. I think the pros are closer to 101.50 going to be short this market. I think they'll get out if the red line closes over 21 by next Friday. Barring that, I expect them to be selling a rally if it develops. And in the eurocurrency, you don't have an embedded reading. You're overbought. Market is now fighting a battle at the 200-day average up to the upper Bollinger Band. And that's offering you an awful lot of resistance right now. In the Canadian dollar, I think the smart money came out of this market. Number one, it was a vertical price rise, just straight up. Number two, right into the Bollinger Band. Number three, right into the 100-day moving average of closes. Now, that didn't just happen today. That's been happening over the past 2 weeks. Overbought there, and I know what I said in my service. I said, I wouldn't be deploying new money on the long side into something like that. I'd wait for pullbacks in a better chart pattern. And you're going to hear me say that for a while now. Today's action, this whole week's action, they took markets out of uptrends, downtrends, and they've got the charts into a bit of a mess. That's okay. I love when that happens because when they come out of this, they start doing things you can play with. In the end, what were the strong currencies today? The yen, the Swiss franc, and the dollar. Higher lows, higher highs. I want to use the word never. I would never tell a client of mine, hey, you got to go in and buy the 100-day average, the upper Bollinger Band, because it's going higher. No, I'd be saying that's a spot where I think the pros are taking money off the table, but the chart is bullish. In Bitcoin, still bearish. And in this market, not acting with good support. Take a look for the week. You're down nearly 10%. You've come to the lower band. I know this is where everybody gets super bearish, but if you've done that in the past, selling that band, how have you fared? I think you've lost your shirt. Not a good move, okay? Rallies, yes, not there. Differential between Brent and WTI for the first time crashing in under that 18-week average for a while, and Brent's just letting go to the downside. Now, what's going on? China, the biggest of the buyers of crude recently, is what? Their malaise is really ill, and the government doesn't be ready. It doesn't appear ready and hasn't done anything to really change the picture. They're dancing around the fringes. Oh, maybe we'll let people refinance their homes. That's so kind of you. And you'll give them maybe an 80 basis point cut. That's what a wonderful government. All right. The problem is the people realize that they're scared. They're watching home values down. Nothing's working right now. They're watching tariffs come from everywhere they look. Canada, Europe, the United States. We're all in the West, no good. Is that the truth? It is not the truth. They're producing products with government money at losses that would be in any other place, and the tariffs go on when that occurs. You may not agree, but that's basically it. And don't get me wrong. I question sometimes our things when we export, if the government gets involved. The difference in America is I don't see the government, frankly, in a lot of industry. I don't see them on farms growing anything. You see what I'm getting at? But do we support the farmer with ag programs that we may not need? Yeah. All right. Is that wrong? Could be. Okay. I can understand other people's point of view. And if you don't have an open mind to that, shame on you. All right. But we do guarantee stability in America. And as Trump will say, we want to be energy independent. And depends. I don't know if he'll win or not. I'm seeing a lot of polls come out against him and a lot of predictions coming in from top poll pickers that aren't in favor that he'll win. So we'll see. This is a horse race. Lower highs, lower lows, everything's bearish here, under the Bollinger Band. And again, you don't stay under that very long. Could you? Anything's possible. Do you want to sell under it to find out? Not me, but you can. Same thing in WTI. So are we going to that $60 mark? Could be. You could be. I haven't heard the Biden administration come out and say, let's buy oil for the strategic reserve. Why not? Isn't this a pretty good spot to do it? Certainly between there and here, which isn't far away right now. That's what they should be doing. Gasoline, falling out of bed. And again, what did I say to you? I said, Labor Day is not a big driving holiday. You've lost that. And this market's coming down hard. And you'll probably get down hard in heating oil. And we'll cover that starting on the weekly charts next week. So I want to remind you, don't get caught in all the psychology of the market all the time. Try to get caught in some of the ideas here. And that's what they are. They're ideas that I throw out at you. You take them from there and decide what you want. You can write me with a subscription. I'll answer questions. I really try to be, if you will, the originator and answering what my subscribers are asking me to do for them. Again, there's an icon up here. You can go to iraepstein.com on the top left. You'll see that part, or you can call my staff and they'll work with you. Unfortunately, they don't work on the weekend. So if you call them, you're going to be after the sale. You've got 48 hours left from the posting of this. I hope to see you there. I'm Ira. Have a great weekend.